Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, November 21st, and the time is 5:34 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend, as you can see in the upper right here. Coveted four green arrows on the trend gauge, meaning market leaders acting well in conjunction with all three of the time frames that we track for the major indexes using the short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. We got three green arrows there, all three time frames. In grow mode, green means grow from our GROTECTION flagship portfolio and management approach. So what happened today? All eyes after the close yesterday were on NVIDIA earnings, and the report was fantastic. They beat, they raised. The stock was down slightly. Jensen, the Wang, the CEO, during the conference call, very bullish. Um, and Overnight and into the morning pre-market, we went from being down 2 to 3% to being positive and running into the open. Looked like it ended up with a gap up, bunch of price target increases overnight after the conference call and digestion by the analysts. And it looked like it might be off to the races for NVIDIA, but it reversed the open gap down, reversed it pretty hard, and so did all the Magnificent Seven. We also had overhang from Google because the Justice Department wanting them to split off Chrome, which is integral to their entire ecosystem. So Google under pressure there too. Amazon down as well. It trickled over to all the MAG-7 and a very hard reversal right off the open from a 0.4% gap up to negative by about 0.5%. But while that was happening, we could see that the RSP, that's the equal weight S&P 500, stayed green. Our leaders list was 80% green. We saw another potential leader, Snow, with a great earnings report and a big gap up, and that was holding. And really, what it looked like was the Mag 7, or what we call the Big Eight, were just dragging the S&P and the Nasdaq, especially the Nasdaq 100. But that trickled over to the S&P 500 because of the heavy weights. But everything else seemed fine. Small caps and mid caps were outperforming. And by the end of the day, NVIDIA turned green. Not by a lot, but when you have a huge stock that has had multiple beat and raise quarters, you always are worried about that 2x4 lurking around the corner, take a swipe at you. That didn't happen. We avoided that. Uh, Great breadth numbers on the day, 79% up day. Just the Big Eight or the Mag 7 were the only fly in the ointment, and leaders acted extremely strong today, as they really have all week. One big reversal out of a big leading stock. We'll talk about that and compare it to another former big leader that had what looked like a climax top as we progress through the video. So strong day for mid and small and growth leaders. The Mag 7, however, down, no big deal. Here are the final numbers. The 21 over 21, this is what you want to see. 16 up, 5 down, up an average of 2.24%. The Big Eight, as we mentioned, down an average of 0.83%. The RG8, sorry, Growth ETF Composite, up 1.53%. Nice day, led by the one you want leading, FFTY, that's the IBD 50 index. And that's leading growth names in there. And if that's up 3.1% on the day, that means that the pond that we fish in should be acting pretty well. S&P 500, as I said, went from a 0.4% up to 0.5% down, closed up 0.5%, and even better, the equal weight S&P up 1.3%. NASDAQ 100 turned around despite the Mag 7 being down. That ticker's MAGS. That was down 1.1%, but the Qs rallied to close up 0.36%. You can see the equal weight cues up 1.46%. So it was a breadth day on the NASDAQ 100 as well. Dow up a little more than a percent, mid caps and small caps up 1.7%. Global diversified 60/40 stock and bond up 0.24%. Bonds basically flat. Our in-house flagship portfolio, GROTECTION, up 1.47%. Bunch of leaders doing their job for us today. Let's get into the charts. And here we are with the S&P 500. Now, the keys that we've been discussing in these videos for the last couple of days is we wanted to make sure that the S&P stayed above this 5950 on the bottom, and ideally we want to see it get above, so 5850 on the bottom, 5950 on the top. We poked our head above 5950 for most of the afternoon, a little bit of a fade into the close. We closed 1 point below that, but good stuff that 5850 held. Good action today, especially. Let's go to a 5-minute chart and you can see the big gap up in immediate sell-off for an hour. And then that's it. The bulls showed up after that, especially the smaller big cap stocks. Nice 3-hour rally, and then a base into the close. That puts us back above the 8-day moving average. Notice we've been pinched between the declining to flat 8 and the uptrending 21. Market does its best work above the 21, but even better above the 8. If you can trend, look at this 6-week trend above the 8-day moving average here. Look at this multiple week trend above the 8. If you can trend above the 8 for a while, now we've got 6,000 ahead of us. We were not able to get above that last week and the week before after the election. That's going to be resistance, but we've got the 8 curling up in junction with the 21 rising, the 50 rising, the 200 rising. What we want to focus on is holding this 8-day exponential moving average now on the S&P 500, and then stay above the 21 as well. You know, we've seen multiple 40, 50-day trends above the 21-day moving average during this 2-year, well, not 2-year. Yeah, it is 2 years, really, since we bottomed in 2022, but especially bullish since last November. The past year has been really kind to shareholders of all kinds of stocks, especially growth leaders, and staying above that 200-day moving average, as we talk about all the time. Just one test in the area, in the vicinity of it, in late July, early August. But good stuff here. So we set our sights now above 6,000. On the downside, that 5850 level, as long as we hold that. And, you know, next week, we should have the 50-day moving average coming into that 5850 level, an additional support level. Let's go to the NASDAQ 100 and bring up the 5-minute chart of this as well. You can see the big gap up and then the brisk sell-off, the recovery along with the S&P, base into the close. So undercut and reclaim of the 21. We've been playing ping pong along that level in this 500 level as well, but closed above the 8-day exponential moving average now. Would love to see a big run higher, hugging that 8-day exponential moving average higher. This is more volatile against the 8 than the S&P is going to be because of sector rotation. So we'll be focusing on the S&P for that 8-day moving average observation. Dow Jones Industrial Average poked back above the 8 after 2 days of undercutting and reclaiming the 21-day, coming into this 44,000 resistance level, looking fine there. S&P 400 mid-cap gap and closed near the high of the range. See on the 5-minute chart that there was nowhere near the violent pullback that we saw on the large cap NASDAQ 100 and the S&P 500. And if you bring up RSP, the equal weight S&P, there was no harsh pullback as well. So always important to keep an eye on that equal weighted index and see if we can get on a run above the 8-day moving average in mid and small caps. as well. So there's RSP. Same thing for mid caps now. We went back into the Russell 2000 with the move back above the 8 day moving average, trail a stop along the 8 day with this one. Another one that gapped up, closed near the top of the range, and no heat at all after the open on this one, the way we did pull back harshly on the big caps. So those are the major indexes. Now let's go to inter-asset correlation. We'll start with the VIX. VIX on the day, down 1.7%, still above that 16 level in the 200-day moving average. We'd like to see it get below that 16 level, ideally, but really nothing wrong with being with a 16 handle. Zero USDR, this is the dollar, and this just continues to go higher, riding the 8 day moving average. But normally this is a headwind for stocks when it's happening, but it's not happening. The US index is extremely strong. What it is hampering is big weakness on international. And we'll talk about that in the podcast tomorrow. Tune in for that. We do that around noon Eastern time. It's out on YouTube by 2, 3 o'clock. And then you get an email alert Saturday morning on that. So there's the dollar. How did that cross over to the precious metals? Gold 4 days up after a harsh sell-off last week, back above the 21 and 50-day moving averages. Silver down 0.2% below those moving averages. Gold and silver stocks rising 3 out of 4 days now into the declining 21-day moving average. And Bitcoin above 99,000 today, up 4% on the day. We're going to talk about MSTR, the Bitcoin proxy, leverage Bitcoin proxy that we've been using when we get into the chart section. So there's Bitcoin higher highs. Let's flip the bonds now. Not much going on in Bondville today. Tight range on BND, on TLT, and nothing big on rates either. So we've been consolidating for a couple of weeks in bonds. All right, so let's get to the tail of the tape, hit some highlights. We've had some positive changes here. The stochastics on the indexes turned up without even getting down near oversold. That's a positive. So we got 4 of the 5 indexes confirmed higher, 7 of the 8 of the RG8. The NASI RSI is looking like it's trying to bottom right at the top of oversold. That should improve today with the nice breadth. Dollar continues higher. It's really only impacting precious metals and foreign stocks. Sideways consolidation on bonds. Percent of stocks above the 5 day. We got the green arrow, but with the yellow background, meaning a little bit of a caution. It's approaching FOMO levels. This moves kind of quickly. Connor did a good explanation of the graph that we pay attention to, but secondary indicator, but certainly something we're going to pay attention to. VIX, I forgot to update this. VIX is 16.8. Fear and greed is approaching greed. The news I mentioned, NVIDIA beat top and bottom, the volatile action. We'll look at the chart here momentarily. The ranges, the keys that we've been talking about today. We did an above and fail versus 59.50, closed right at the top end of the range, but we are back above the 8 day moving average. Haven't gotten to 510 yet on the NASDAQ 100. We're still trading in that range, but did get above the 8 day and mid and small caps nicely above their 21 day. Day count from a 4 day consolidation, we broke out of it, and up 1 is the day count now, back above the 8 day moving average with an upward sloping moving average, 4 days above the 21 day moving average, and that, of course, is sloping higher as well. Expectations remaining positive as long as we're above the 21 day moving average. On the NASDAQ 100 and S&P 500. How about sectors? 10 out of 11 of the spider sectors positive. Good sign there. Semiconductors, banks, cloud software, and retail led the way today. To the downside, XLC, primarily because of Google. MAGs, that's the MAG-7, and emerging markets. No bueno. Portfolio wise, we did some offensive selling on Reddit as it got 4 ATR above the 21-day moving average. We trimmed a third of that. We bought Snow, a Bible monster gap up, big volume, and URTY. That's 3 times small cap. So that brings our adjusted beta from 1.77 to 1.89. Bottom line for the day, strong day for growth leaders. Small and mid caps led, MAG-7 lagged, keeping the same keys into Friday. We're watching the S&P 500 range, 5850 to 5950, where we're at the top of it now, and we want to stay above the 8. NASDAQ 100, same thing, 495 to 510, stay above the 8, and mid and small caps versus their 21-day moving average. Let's get into some charts, and we'll start off with we showed Bitcoin. Let's show MSTR. We've trimmed this like 4 or 5 times along the way up. This had the third straight big gap up, and that was just too much. Hard reversal early, then the big H pattern closing near the lows of the day, up after hours 5%. But this looks a whole heck of a lot like SMCI. Let's go back to when it put in its climax top back in March. Let's go to the daily. Let's go back to April. And here was after a monster move higher, after the third gap up and then reversal on SMCI next day. And the day after that, it kind of consolidated. And guess what? Was it a climax top? Well, 3 weeks later, it made new highs before finally rolling over. So I'd say the very easy. Now, two differences between this. One, we're talking about a stock, a company, Supermicro, first of all, that has recently had accounting problems. They've got big competitors in what they do for creating server AI servers for these AI data centers. A lot of competition in there. They certainly are one of the leaders, but um, MSTR, what they're doing with Bitcoin, you can't really compare it to what SMCI was doing. Is this a only time will tell for sure if this was a climax top on SMCR. But guess what? SMLR is similar. Ironic. It's the grouping of the consonants together. Semler Scientific. Look at this. Why is this acting? They're doing the same thing with their balance sheet as MSTR is doing. This has come out in the past couple of days, and the last 2 days, people have been using this as a leverage Bitcoin proxy. So this is a medical products company, solidly profitable. Um, and great reaction to their last earnings report. And they've look at the up 12%, 900% above average volume. 2 days on really big volume, and it's because of the Bitcoin frenzy. So is SMLR the new MSTR? Time will tell. Is MSTR top like SMCI? We don't know that either. We do know Bitcoin is approaching 100,000. That's a psychological level. Wouldn't be surprised to see it pause there. MSTR paused a day ahead of that. Assuming we break 100,000 or get to 100,000 tomorrow on Bitcoin, but so that is the Bitcoin story for the day. Let's talk about the stock that we bought today. Snowflake. Couple earnings reports ago kind of fell apart. Let's look at the weekly chart here. Was a leading stock. 3-week earnings reports, but not the most recent one. Sales down, but big beat, or sorry, earnings down, but big beat on sales and raise guidance. Anytime you see something 800, 900, 1,000% above average volume, you got to pay attention to it. It's data warehousing. And they've got an AI component and a government component. Up 33% on 800% above average volume. We bought it below 170. on a little pullback during the day. I'll just talk about how we timed it. It's getting away from you, don't chase. We use the 1 minute stochastic. Actually, it was back here. The 1 minute stochastic when it pulled back. So using intraday weakness on a very strong stock to establish an initial small position. We've been seeing a lot of these earnings gaps just pausing for a little bit and then taking off higher, and we're in several of them. So the current climate for stocks is beneficial to that. So we added Snowflake to the portfolio. Let's take a look at the rest of the holdings. We already mentioned NVIDIA. The big gap up and fade just down to the 21-day moving average, finished positive on the day. Volume only 63% above average, so not the massive uh, double or triple volume that we've seen on recent earnings reports. I think the analyst community is getting a better handle on what they're doing. BRT making a higher high. Dell up 4% on the day. A Lab gap up closed in the bottom of the third of the range. These are all tied to the data center. AI data center theme, and NVIDIA's report benefited basically all of these stocks because they are critical to the development and build out of these. So A Lab gapped up. Again, we own all these. MSTR, we already showed that. iBit, we showed that. Reddit, we took a third of this off as it got extended, and it's down 7.8%. This is just luck on our part, but apparently they had a service outage. They were hacked. So down 8% after hours on that. Bros, nice consolidation after a move out. This is typical of what we're seeing in power earnings gaps. They consolidate for a little while and then head higher. Tesla, 4 days tight now, and oil break continuing to ride the 8 day exponential moving average higher. What in the 21 over 21 list had a bad day today? Well, we showed MSTR. Let's show what else was down. Palantir, gentle pullback, tightening up really nicely around the 8 day moving average. That's a leader, and another one that had an earnings gap up and then worked its way higher. Dutch Brothers consolidation, Tesla consolidation, Toast, another earnings winner that's working higher. When the market is right, this is what you see. When it's not right, these earnings gaps get treated as a liquidity event, and selling happens into them. Sometimes it happens either way, but definitely the right climate now for growth stocks. And anything else I want to talk about in particular? I don't think so. Let's talk about one other name, AI, appropriately named. Uh, Big move yesterday. They entered a partnership with Microsoft, and it seems to be very well received by the community, making a higher high today after a 1 day consolidation. Their CEO is a tech veteran, Tom Siebel, and up 8% on the day. This is not in our 21-21 list, but on our leaders list, and something we're keeping an eye on in another instance of strength, not getting sold, but seeing some follow up to it. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, we just crossed the $200 million mark in assets under management. That's a combination of people flocking to come on board and 40+% gains over the past year. Email my partner, Dan Stewart, dan@revereasset.com. And that's without bear markets. You don't get bear markets at Revere. Why? Because we've got a strict set of rules that we talk about every night on these videos. Our flagship portfolio GROTECTION, designed to grow assets during uptrends, protect them during downtrends. Lost less than half of what the market lost during the bear market of 2022. Fantastic recovery to all-time highs since then. And it's a common sense approach. What other aspect of your life, when something is going well, do you not do more of it? Or if something is going poorly, do you not try to make corrections? We have a set of rules that apply to your investments. Why should it be treated any different, especially when you factor in that Wall Street is a massive conflict of interest that sells products, and they're designed to keep you in because they can't collect your fees unless you stay in their products. But that's not us at Revere, and we're very happy to detail it every day. We've got an incredibly strong team of technical analysts, and give us a shout if you're interested. And with that, I'll wrap it for Thursday, November 21st. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.